Welcome to another episode of Savage Cash, here with me, Suppoman, your superhero cryptocurrency expert, and the future Sir Suppoman. I dare say one day the Queen will be giving me the title of Sir. Rumour has it even she is a massive fan of my podcast, because she loves, homegrown talent, and she will say, Suppoman, you have done so much for the wonders of the UK economy. You have really made so many people rich and turned my unlimited wealth into even greater unlimited wealth. Thank you very much. I am able now to, get payments anonymously and nobody can track them. So that is exactly what happened this weekend, actually. That has led to the explosion of anonymous coins such as Dash and Monero. These two have been massive gainers in the last few days. Why? Mainly because of this article, what this article says here. So essentially speaking, the US are looking to strangle crypto. They are looking to make it either not work or to clamp down on the people in the US that are trading cryptocurrency, investing in cryptocurrency. It appears that they are really trying to stop that from happening. If you are in the US and you want to invest in an ICO, a lot of times you're not able to if you live in the US, because they are trying to stop, cryptocurrency trading happening. They're trying to stop people investing in cryptocurrency. And so, a lot of markets that have invested, a lot of countries that have invested in the US, invested in their stock exchange, have taken a lot of their money out because of what is happening in cryptocurrency. And another, an article that came out is this one about anonymous cryptocurrency prices soar as IRS tracks Bitcoin users. So people in the US that are trying to basically evade tax are making sure that they are investing their money into anonymous coins because it's far harder to track what they hold. Okay, so Bitcoin is available on public ledgers. The information is publicly available. But if it is turned into anonymous currency, then it can't be found. And so therefore, it has led to, Dash and Monero really going sky high in value. Now, in this cryptocurrency podcast, what I'm going to do is I'm going to basically give you some tips on how to trade the news, okay? Because when something like this comes up, prices explode, okay? And then one day, the day after the prices explode, you could be sitting on a massive fortune, okay? Depending on how much you invested in and at what price and how much it's multiplied. Your investment has multiplied since you had invested in something that really blew up because of the news, okay? So you'll find yourself one day, one morning, with a hell of a lot of money, and then essentially the news dies down. Basically, what had been caused by the news, this massive explosion that had been caused by the news, has turned into smoke and then nothing. And then what happens is that all of a sudden, what soared then goes down. It goes down because it's not current anymore. And what happens is that if you leave your money invested for too long, you will lose money. Now, this is why I don't really do trading, okay? I don't do the short-term gain. I do occasionally, but it's not very often that I do. And I certainly wouldn't in areas like this. So people are saying, Suppoman, didn't you get involved in Dash? Didn't you get involved in Monero? No, I didn't, because those aren't cryptocurrencies that I will invest in, or altcoins I will invest in because of how much they are already worth. Okay, so if we have a look at Dash, even if this goes up to $700, I'll only make twice my investment. Twice, okay? And it could take a while to get up to that. Whereas I could double my investment quite easily on a much smaller altcoin that suddenly explodes in value. There are people who have made 1,000 times gains on a coin. I'm not going to say what coin it is because personally I don't think it's a long-lasting one. But people have made massive gains on a coin in the last kind of 24 hours. And that is so easy with smaller altcoins. But you want to pick altcoins that actually have some substance, not just something that is hyped, okay? Because hyped means you'll probably more than likely get burnt. So how do the pros make sure they don't get burnt when something goes up massively because of the news? I'm going to show you this right now, and I'm going to show you this not simply because of what's happened with Dash, but also what's happening with some cryptocurrencies, okay? So, for instance, Binance Coin, okay? So, Binance Coin, Last week when I spoke to you about it, this was worth $2.30 or so. It went up to $2.50 and then crashed, okay? And then there are people in my mastermind group that are saying, what on earth has happened to Binance Coin? You know, 1 minute it was $2.50, the next minute it's, you know, $1.90. It's since gone up slightly to nearly $2.10. But how do you stop yourself getting burnt? Because the pros, they stop themselves getting burnt before there's a chance for them to feel a burn, okay? They don't feel it, okay? They do feel it slightly, but I'm going to tell you more about that right now. So, let's just go to Bittrex, okay? Now, I'm going to use a coin as an example of what to do when a coin suddenly explodes in value, okay? Using AMP as an example. Now, I'm using AMP as an example because I still own a tiny little bit of it. Obviously, I bought quite a lot when there was some market news, you know, the beta was going to be launched, and then all of a sudden it just tanked. So I sold as much as I could, but I kept a little bit, okay? I kept a little bit, and this is the little bit that I still have. So I'm going to use this as an example, all right? So let's assume AmpCoin has just gone up. Let's just assume that a bit of market news has come up, and it's saying AmpCoin has just released a new wallet. Absolutely amazing, sparkly new wallet that, you know, all of its users have been waiting for so they can store their cryptocurrency off the exchange, okay? So that news comes up, all of a sudden, it gives the ability for AmpCoin to explode in value, all right? So let's just assume I've bought 142 AMP coins, okay? It's gone up, you know, that I bought it at 4200, it's gone up to 4234, excellent. Okay, so I'm in profit. But what happens when I go to sleep? Okay, this could go down to 4,800 sats. Okay, so how do I stop myself getting burnt? Okay, so a bit of news has come out. How do I stop myself from getting burnt? This is where you use the sell orders and stop losses. Okay, so what do the pros do? So what the pros do is they instantly go, right, if the price goes down below the price I bought at, on or below, I sell it all immediately. Okay, that is basically what the pros do. They take the transaction fee as a hit. Okay, when in some cases it's not very much, in some cases it's quite a bit, but it's a lot less than getting burnt and losing, you know, all of a sudden a fifth of its value or a quarter of its value. I mean, can you imagine what that would do to some of the whales that are trading right now? I mean, they can lose 6 figures overnight over, you know, not having some sort of security measure. So they've got their 142 AMP coins. The price has been basically inflated because of some market news. Now what they do is they go to bed and they make sure they don't get burnt overnight. So they will put a sell order at the price they bought at, or maybe a little bit more. So they probably put, you know, 5220 rather than 5200. So they basically can, you know, save on some of the transaction fees that would come at selling at the exact price they bought at. Okay, so that is something that they do. Something else, because a lot of how other, you know, cryptocurrency traders do it is, let's say the price goes up here. Sometimes the price can go down a bit and then really explode. Okay, it can go down a bit and then go right up. Okay, and if they've sold it all when the price goes slightly down a bit, then they can't benefit from when it goes right up. So this is what they do. They put a stop loss in. Okay, so what happens is that they go on something like Bittrex, you use the tools. They have very similar tools on other exchanges. Okay, so it may not look exactly like this, but it looks pretty much like this. Okay, so what they would do is they would have the price they want to sell at. So let's say that is, let's say rock bottom. If it goes below this price, sell it all, but it gives a bit of room for it to still grow. So that would be 5,000 sats. Okay, so there's still room for it to grow. You know, if it goes down, if it loses 243 sats, then that's it. It's dead in the water. Sell it all. Okay? So, they would put that as the, yeah, once it hits that price, sell it all. Okay? But what they can do is they can sell incrementally until that price if a certain price is hit. Okay, so if we put a conditional order, now basically conditional means if it hits this, do this. Okay, it's a bit like having a formula, running a formula. If this happens, conduct this action. Okay, so good till cancelled means that it will sell it incrementally. Immediate or cancel means it will just get rid of the whole thing. So if it hits a certain price, it'll just get rid of all of it. So you want to sell it incrementally just in case the price explodes again. Okay, it goes down and then it explodes again. So good till cancelled. So you've got your absolute sell price. Okay, if it goes below this price, you know, you've given it enough of a window for it to perform, and if it doesn't perform, just sell the hell out of it, because I don't want to make a big loss. I don't want this to go down to 4,800 sats or even less than that. Okay, so you put it at 5,000 as the absolute end price. Okay, so if it's less than or equal to this price, then it will start selling incrementally. So you'd enter here 5230. So at the moment it's 5301. Okay, so if it goes down to 5230, it will start selling incrementally until it hits this price where it will just sell it all. All right, so that's what you're going to be doing. If the price is the equivalent of this price or less than, it will start selling incrementally. And then once it hits 5,000, it will sell it all. So that is how the pros do it. That is how the pros stop themselves getting burnt when a piece of market news explodes a coin, or even if they are investing in a coin for the short term because they think, oh, right, I've got a good feeling about this coin. I've got a good feeling that Binance could go up to $5. Okay, so I'm going to invest in this coin because I've got a really good belief, given, you know, the market conditions, given, you know, this is a Chinese, you know, orientated exchange, given they're going to be doing some ICOs, this could go up much higher in value. So they have this feeling, right, so, you know, BNB is going to go up to $6. But if it goes below $2.30, let's say they bought it at $2.50. If it goes below $2.30, sell it all. And then they stop themselves getting into the predicament where if it goes down to 208, they've gotten burnt because they've already sold it. So that is how the pros stop themselves getting burnt on a trade. Okay, so there's two types of cryptocurrency, you know, trading, I suppose. There's the trading aspect, which is short term, and then there's the investing aspect, which is long term. And if you're getting into a cryptocurrency for long term, it doesn't necessarily matter. Well, it does matter. You don't obviously want to invest in a cryptocurrency that's going to lose value, but the price matters less in investing because you've got a long way to go when you're investing in something for the long term, because you're going to be investing for a period of months or years or even decades maybe in some cases. So this price of $2.08 is probably not even, you know, touching the surface of where this is going to be. This could, you know, easily go up to $5, $10, $20 dependent on how much this coin gets picked up and how much the Chinese markets and future ICOs impacts this coin. So this could go up hugely. But if you're doing the short-term aspect of trading, then this is how you stop yourself getting burnt and how you enable yourself to win most of the time. Okay, so going back to AmpCoin, this is what will happen if a trader is going to go to bed and they haven't yet hit their profit point. So as a trader, if something has just, you know, hit the headlines, if AmpCoin has just hit the headlines because of this wallet, okay, they're probably going to want to sell at 6,000 sats, okay, or 5,700 sats. That is where they see themselves going out. That's where they exit the trade, okay? But to stop themselves losing money, they enter either a sell order and or a stop loss, which means that it will sell it incrementally until it hits the absolute end point. All right, so that's how the pros do it in day trading, and they decide on their exit point, in which case what they do is they will cancel their order, because that order is basically good until they cancel it. All right, so they cancel the order and then they sell it at a profit. That's what they mostly do. They don't look for humongous profits. A lot of them sell well before, you know, it's really peaked. But the reason why is because they want to make sure they are profiting every trade. They don't get emotional about it. They can't predict when it's going to stop rising. Okay, sometimes a coin just reaches its peak and then it goes down. So they sell before the peak. They sell before it, or sometimes even just after it, because they don't want to lose money. So that is how the pros do it. That is how the pros mitigate their losses. And if you are going to be investing in a coin, let's say Binance or another one such as, you know, DNT, which is another one that has lost a lot of value recently. This was up to 16, 17 cents. But for the short term, this is extremely bad. Okay, for the short term, if it's gone down 5 whole cents or 4 whole cents, then you are going to be panicking, you're going to be upset. So this is how to stop yourself from losing humongous amounts of money when you are trading. Because ultimately what you can do is you can just put your sell order or your stop loss and sell order. And when it goes down and the value goes right down, you can buy back anyway, which is called shorting. Okay, so you're basically selling it and you are buying it at a lower price later on. Okay, so that's how you short that's how you short a cryptocurrency. So that is just how you mitigate risk when you're doing short-term trading, when you have got a piece of market news which has just hit a coin and you want to make sure that you profit from it and don't get burnt by it. So if you want to learn more about cryptocurrency, trading and investing, you will want to take the Cryptocurrency Investment Course 2017, Fund Your Retirement. And in this course, you will learn exactly how to do investing and how to do trading. And you will learn how to play the market. You will learn trading strategies. You will learn trading analysis. You will be able to spot when a cryptocurrency is likely to soar and when it is likely to crash. So I hope that this cryptocurrency podcast has really helped you with mitigating risk, with mitigating your losses. Now, if you're doing long-term investing, sometimes the price doesn't necessarily matter because in the long term it will go up. But in the short term, a lot of people panic and then they sell at a massive loss. So this is to stop yourself buying high and selling low. I hope that this has really helped you and given you something that you can do today to stop yourself from making a huge loss on a coin that you maybe believe will do well or some market news has hit it and you don't want to make a huge loss from making that trade. Hope this has helped and I'll see you in the next episode.